As we all know, leveraging strategic partnerships between trading companies is essential for boosting intra-African trade. Given Africa's diverse economic landscape and the implementation of the African Continental Free Trade Area (AfCFTA), such partnerships can help companies overcome challenges, access new markets, and strengthen regional integration. In my opinion, here are some key trading companies can leverage strategic partners for intra-African trade. One of these is through expanding market access, through joint ventures and collaborations. Trading companies can enter into joint ventures to expand their reach across the continent by partnering with companies in different parts of the continent. For example, a company operating in East Africa might form a partnership with a West African counterpart to access such other markets. These kinds of collaborations can reduce entry barriers such as regulatory challenges, tariffs, and logistical issues. Distribution networks. By partnering with local firms in different countries, trading companies can tap into established distribution networks, and this reduces the complexity of establishing new infrastructure and helps companies scale quickly across regions and thereby accessing consumer bases. Another issue is on optimizing supply chains through shared logistics and transportations. One of the significant barriers to intra-African trade is inefficient logistics and logistics and transportation. Strategic partnerships can help companies pool resources to optimize their supply chains. For example, companies can share warehousing facilities or establish joint transportation routes to reduce shipping costs and improve the speed of goods movement. Local sourcing partnerships. Trading companies can collaborate with local producers and suppliers in different African countries and thereby leveraging the region's abundant natural resources and agriculture. This strengthens supply chains and supports local economies by sourcing inputs from within Africa instead of relying on imports from outside the continent. Like the last panel, I listened to them saying we need to leverage on digital platforms. E-commerce platforms and digital marketplaces have become commonplace on the continent. With the rise of digital trade, trading companies can form strategic partners to create or expand e-commerce platforms that facilitate cross-border transactions. Digital platforms reduce the need for physical presence in multiple countries and offer small and medium-sized enterprises across Africa access to broader markets. There is also the issue of digital payment systems. Partnering with fintech companies or mobile payment platforms can help overcome challenges related to cross-border payments, which is a key bottleneck in intra-African trade. By collaborating on integrated payment systems, trading companies can facilitate smoother transactions and reduce exchange rate risk for intra-African trade. Collaboration on standards and certifications through mutual recognition of standards. Inconsistent standards and certifications also hinder intra-African trade. In this area, trading companies can form partnerships to mutually recognize each other's certifications and product standards. This simplifies cross-border trade and ensures that goods produced in one country meet the standards required in another. Harmonizing quality control. Companies can collaborate to develop common quality control mechanisms across multiple markets, ensuring that products meet consumer expectations in various countries. This is particularly important for goods such as products, electronics, and pharmaceuticals. Another issue I would like to touch on is accessing financing and investment. By pooling financial resources, trading companies can leverage strategic partnerships to pool financial resources either by collaborating with financial institutions or through shared investment funds. This can provide them with the necessary capital to expand operations or enter new markets within the continent. Access to trade finance. By partnering with banks, regional development institutions, or fintech firms, trading companies can gain better access to trade financing options. This is especially important for SMEs looking to expand across borders but facing challenges with working capital or credit lines. Another point we'd like to focus on is on enhancing knowledge sharing and capacity building. Technical expertise sharing. Strategic partnerships allow trading companies to share technical expertise, best practices, and local market knowledge. For example, a South African company with expertise in supply chain management might partner with a Kenyan firm to streamline logistic operations in East Africa. Capacity building and training. Collaborating on training and capacity building initiatives can improve the skills and capabilities of companies across Africa, making them more competitive in the regional and global markets. This is particularly important in sectors such as manufacturing, agriculture, and services where specialized skills are critical. Navigating regulatory environments. Advocacy for policy harmonization. Trading companies can also form strategic partnerships to advocate for the harmonization of trade policies across African countries. By working together, companies can influence regional governments to streamline custom procedures, reduce non-tariff barriers, and implement trade-friendly policies under the AfCFTA. Navigating trade agreements. Partnerships with legal and trade advisory firms can help companies navigate the complexities of trade agreements and ensure compliance with local regulations in multiple jurisdictions. And building regional value chains. Regional production networks. Trading companies can collaborate to establish regional value chains where different stages of production take place in different African countries. For example, raw materials from one country might be processed in another, and the final product could be assembled in a third country. This boosts intra-African trade by creating a continental value chain, reducing reliance on external suppliers. Specialization and competitiveness. Through strategic partnerships, companies can specialize in specific segments of the production process, thereby increasing efficiency and competitiveness. This allows them to take advantage of economies of scale and access markets across the African continent. Sustaining green trade initiatives. Joint sustainability initiatives. Companies can collaborate on sustainability efforts such as reducing their carbon footprint or adopting eco-friendly production methods. This is increasingly important as consumers and governments push for greener trade practices. These kinds of partnerships can focus on sustainable sourcing, energy-efficient logistics, and the reduction of waste in supply chains. Access to green financing. Partnership with environmental organizations or development banks can provide access to green financing, which can support initiatives that promote sustainable trade within the continent. Let me end my remarks by stating that strategic partnerships among trading companies are vital for unlocking the full potential of intra-African trade, and by pooling resources, optimizing value chains, and leveraging regional and digital platforms, these partnerships can overcome barriers, reduce costs, and foster economic growth across Africa. With the AfCFTA creating these new opportunities, such collaborations will be key to driving regional integration and increasing trade between African countries. I thank you for your attention.
I want to start our conversation by asking Mr. Arthur, just perhaps at the outset to make clear to our audience the role and functions of a trading company under the AfCFTA. You have 2 minutes, sir.
Thank you very much, I am very happy to share this platform with the illustrious, dignitaries here. I want to first draw attention to the fact that the whole concept of trading companies isn't really new. It's been around since the 16th, 15th century in Greek times. What has now been rebirthed as the Silk Road, these are all different variations of trading companies. Trading companies were the instruments that the colonialists used to subjugate the African economy.
The Dutch East Intra-Africa Trading Company.
The Indian East Africa. So trading companies have been a tool, a tested tool for economic empowerment. And so when we talk about trading companies under the AfCFTA, it is just a natural progression that we have to position this as one of the key instruments with which we are going to retake the African economy back. That is how powerful this tool is. Currently, we are only looking at it as trading companies to put SMEs together. No. The trading company phenomena, if it is properly supported by members of the AfCFTA, and I mean the state parties, will unleash the potential for Africans to take back our economy. I think I'll leave it at this stage.
Thank you very much, and thank you for your discipline, sir. Well saluted. Naveen, I'm coming to you.
Yes.
Your opening thoughts.
First of all, if you do the same thing the same way, you don't expect different results. So having trading companies is the new way and the new key to open and make access to all the 55 markets of Africa. We do three things that are very important. We create and facilitate and aggregate, and we connect, and I will put 2 lines under the word connect, because we've been doing trading and everything, but it's totally different when I'm doing trading with an AfCFTA trading company in another country than doing it with anyone else who is specialized in one product or one factory selling one product. So the amount of diversification and the amount of economies of scale is enormous. The other thing we said, CC, it's create, connect, and the other one is deliver. We deliver cost effective, we deliver, as I said, very diversified industries, and our work will help the investment in transport, the investment in logistics, because when we do much more, then it will make sense to invest in the logistics and in the transportation more between our continent. And I will leave my colleagues to continue.
Thank you, Naveen. Felix, I'm coming to you because you represent an interesting sector. Some have gone so far to the extent of saying, in the past when we talked about infrastructure, we talked about the roads, the railways. Today, we've got a new infrastructure type. Your understanding of how we leverage it for increasing intra-African trade, sir?
Thank you so much.
And that's telecommunications, just in case.
Thank you so much. I look at the infrastructure we have in 2 ways. One, the infrastructure we have is quite enough. There is not quite enough, I'd say, is infrastructure you can first leverage on to initially use it to adopt the import and export that we actually want to take up in the market. What I'm trying to say is this. I'm looking at trading companies being the initial aggregators, being the initial users of this particular infrastructures, leveraging it on it as much as possible, being the initial distributors in the export market. And in other words, I'd say that's trying to make sure that the infrastructure that we use and is available is actually leveraged as much as possible.
Very brief, thank you. And to the point, totally appreciated. Babalwa, let me come to you. Your take in terms of leveraging the trading companies, and I think from your perspective, you're a practitioner and you have practical examples.
All right, thank you very much. We have had an opportunity as Sinayo Group to operate globally. You know, we started as a financial services group, where now we are trading in 84 countries globally. We then moved into the energy space because our continent is energy hungry. And thereafter, we are traders at Sinayo. But what has become very clear to us are the difficulties of trading in our continent. You know, most people that we have worked with, our bankers, the distributors, they always ask us a question. Say, why Africa, when you can do it better somewhere else?
Sure.
Those are the challenges that we observe in operating in our continent. It's a jungle, you know? And our speaker initially mentioned that we have a huge responsibility and an obligation as leaders in our continent to take back our economy. We have a responsibility to grow our economy. No one else will do it for us, unfortunately. We have to build an Africa that is self-sufficient, that can stand up on its own. And it's myself who's going to do that. It's people around this table. It's you sitting there who will make sure that this continent is totally empowered. And through the trading companies then, we are in for it as South Africa. So just one last thing. What we do, we simplify trading. As I said, it is difficult to do trading in our continent. We make sure that it is cost effective and it is much quicker. Those are the three things. Focus on the simplification, focus on the speed, focus on the cost. We have in our continent freight that sits on our shores for more than 2 months. It says a freight coming from the Netherlands, for example, it reaches the shores of our continent quicker than freight coming from South Africa. Sure. That needs to change, cannot be. And the minute that freight sits on the shores for 8 weeks, you know what it does? It increases costs. Your insurance costs increases. The cost of that ship sitting there with your goods increases. As an SME, having your goods sitting for 2 months in the sea, you are not selling, you are not making money. That is not acceptable.
Absolutely, and I hear the passion, I hear the specific references to Africa, and it reminds me of this other question I keep asking when I'm asked to moderate a session where we're talking about Pan-African issues. And I ask the question, can capital be patriotic? It sounds like yours is patriotic. Let me come to Dan. Dan, your take?
Well, I think it's about time we find the solutions to our problems. We've been talking about problems God knows how long now, but I think the trading companies here is to find a solution to the problems. What I see strategically with a trading company is to break all the barriers. I mean, we are the champions of aggregators. We have to make sure that goods actually move without headache. Without the customer having much problem, the last speakers talk about cost. What McDan is doing right now is to start the Black Star Line. The Black Star Line shipping company, you all know. We have procured 2 cargo planes and a vessel. To start, we're talking about cost. We are talking about the continental free trade. And I can assure you, we don't own the business. Whoever controls the air and controls the sea controls the business. So it is imperative that that decision is made, and is made right now. And that is what McDan, that's the solution we're bringing into the trading companies. Because what you can see that you move cargo from, let's say, Kigali here to Belgium, to let's say Senegal. The cargo will go to Belgium before coming back to Senegal.
Sure.
And these are real problems, and it increases your cost. If we want the continental free trade to really work, I think we have to find the logistical solutions to our problems. We're also building warehouses across the continent and also make sure that goods move. Right costs, customs, and also at the right freight rates.
Yeah, and I can corroborate your story on moving goods from Rwanda to Senegal via Belgium. The practical example of Ugandan coffee landing in South Africa. For it to do so, it first of all goes to Germany, and then from Germany, it then comes to South Africa. All that time in the sea and via the different ports, adding to costs. Okay, Rahul, I saved you for last because you are the big part of the solution, right? You've got to provide the oil that moves the goods and services that we're talking about. So just your take, number one, on the topics that we're discussing, and then secondly, perhaps your ideas in how perhaps we can best do this, given you are a child of African institutions.
So, thanks, Jeffrey. My first thoughts actually go with Mr. McDonald, what he said, very much in line with that. We talk a lot about sensitization of SMEs, whether they know about AfCFTA, etc. And I feel that even if we sensitize the entire universe of SMEs in Africa, and when they start trading and they encounter the same problems that Igere Coffee Company faced when they made their first shipment to Ghana, all of it will come to naught. So we need to have a system in place to ensure that when an SME tries to access a market, the systems are in place for it to be able to do that. And when we say that, are we expecting too much of our SMEs? That they should do aggregation, they should do financing, they should handle warehousing, they should address, they should get the best freight rates. Aren't we asking too much of them? And my answer to that would be yes, that is too much for them. They need the support of a trading company to be really able to market and sell their produce across Africa. And that's where a trading company comes in. That's where our role is to ensure that what they produce, they are able to find a market.
Yeah.
And not only that, the SMEs need to know what they need to produce to be able to sell their products in every African country. It is not that what I'm producing in South Africa would be liked by consumers in Nigeria. They need to know what consumers in Nigeria want and how can they make their products suitable for that market. And that is where trading companies can play a role in understanding the markets, getting that market knowledge, and thereby boosting this trade.
Yeah. Thank you. In your view, do we have enough in terms of the numbers of the trading companies that we require on the continent? When I was reading up for this session, I saw this initially was launched in 7 countries. Do we need more to come on board? Do we call on the Secretariat to facilitate the creation of more of these companies? Later, we're going to talk about the models, but I just wanted first of all to address this issue. I'm still with you, Rahul.
So no number is good enough. The more trading companies are there, the merrier it would be for trade to prosper. As of now, the universe looks to be quite small. So if we look at ARISE, we as a company have several economic zones across the continent.
Yeah.
And our investors, when they looked at marketing their products in Africa, they did not see too many companies whom they could approach. So we ourselves thought that why don't we set up our own company? And therefore, now we are setting up we are calling Africa Trade and Distribution Company,
Yeah.
where AfCFTA Bank has come on board as a principal shareholder.
Sure.
And they have committed a funding of $1 billion to facilitate intra-Africa trade. And we need more of these kind of companies to come on board
Yeah.
to boost intra-Africa trade.
Yeah. Arthur, I'm coming to you, and I really want your thoughts as well in terms of the kind of model that's appropriate for these types of companies. From the experience that we have had so far, which model do you think works best? Is it for us to say it should be the private sector alone, or is it the PPPs, or is it a mixture of both?
For the frameworks of the AfCFTA, and for that matter, any trade agreement to work, government is important.
Sure.
But the practice should be left to private sector. Look, sometimes we are too patronizing with the private sector. The African private sector is a very resilient force.
You have to
20 years ago, they were uneducated and they built the African continent.
Yeah.
They ran the economy. Today, we've all been to school and we run companies, and we're not doing it as much as even sometimes we're doing it worse than our grandfathers who never went to school were doing. So there is capacity at the private sector level. We in the public sector, what we need to do is to interfere less with the private sector, to remove the boundaries. Take, for instance, we've set up a national entity, the AfCFTA, and yet still the preponderance of national policies is there. We've not started thinking continental. We don't have most of the issues we are discussing here will only be resolved with continental policies. No longer Ghanaian policy or Nigerian policy or Senegalese policy on this. It has to be a regional thing. And yet you can't solve logistics nationally alone. It's moving goods across borders. The 2, 3, 4 countries must agree.
Yeah.
So this issue of mixing the non-coherence between our national policies and what would be ideal for the continent is still a very big hindrance.
You're saying governments should interfere less. What do you mean?
What I'm saying is government should remove itself from the process of too much regulation.
But government has got to set regulation, right?
Yes, government has a responsibility there. But what type of regulation is needed and what type is not needed? Take, for instance, you go to most African countries, we have local content law. And I say, under AfCFTA, local content law no longer means Nigerian or South African, it means African. I must be able, local content for me should be African.
I hear you.
You see?
I hear you.
But when we still keep local content as Ghanaian,
Yeah.
local content as Nigerian,
Yeah.
we're conflicting
Yeah.
our own ambitions
Yeah.
and our own goals. And so I believe that, yes, there is going to be some amount of PPP, but the leadership role should be taken by the private sector.
Got you. I've often asked the question as well, should the treatment of African grown companies be different to the treatment that's given to companies that are outside the continent? I've gotten mixed answers to that question all the time. I have to say, there are some who say you need the expertise of outsiders, and also you need competition from outside without interfering with that competition. But at the same time, when you go there, do you begin from the same line? No. You begin maybe 2-3 meters back and you're competing against them in their home turf. Discussion for another day. Babalo, I imagine you agree with Arthur in terms of perhaps the approach to the kind of model that works best in terms of trading companies. But again, I want you to use your examples as well when you were scaling the business, whether perhaps you would have been in a better position if you had a hand from someone, government holding you up and helping you along.
Sure. Working together is very important. I think, in fact, it's a non-negotiable. The private sector cannot do this alone. We have landed as we were scaling up as well. We need our government support. Firstly, from the policies. Number 2, from an engagement point of view. So as a trader, you go to another country. you sell your goods in that country, the first thing that happens to you, you will be subjected to certain regulations and certain rules that sometimes contradict with your country, things that you cannot do because you are a South African.
Is that universal?
It happens. Or things that you cannot do because you are a Ghanaian. You see, yes, it is. So it's important for governments to talk together and make sure that we do speak the same language. But we have had instances as scenario whereby we have traded with governments in other countries. So you have a contract signed by an economic department, for example, and you deliver there, and they just keep quiet after that, they don't pay. And as an SMME, you have flown a lot of goods there. Where our government in South Africa has come in handy, when we called on them to help us, it has been much easier.
Sure.
They have really done so. Number two, you can have the market and understand the market dynamics, but you have the Reserve Bank that makes it difficult for you to make the payment or to receive payments.
Or shall we just say payment system that makes it difficult?
Exactly, but especially payment systems are not necessarily less of a problem. Yeah. Digitization systems are there. I can pay anytime, anywhere I want, but exchange control will block my money. I may not be able to pay my supplier in Uganda purely because it's sitting somewhere. But let me share this with you. At Scenario, we have a company in the Netherlands. I pay from the Netherlands to Uganda, it arrives quicker.
Sure.
And then how do you explain that, you see? So those are the things where the governments need to get involved. Yeah. And then the last example that I would like to make is the issue of the borders, whereby our goods again sit on the borders because of government regulations.
Yeah. Yeah.
But when I say we must work together, I do mean also that within the private sector, you need professionals to work with distributors, you need banks to come to the party in this whole. So this is a very strong ecosystem that is required here to ensure that the trading companies work effectively. So together we can go far, otherwise alone.
Yeah. Spoken like a true African. Thank you. Absolutely, absolutely. Sure. I think perhaps it brings to mind perhaps a point that there's a partner that's not sitting at the table that ought to be at the table. Central banks. We need them, right? You can't do anything without the central banks. Yeah. They are the final facilitators. Nivina, I'm coming to you. Your thoughts, if you want to add to the thought around whether you are fine to go alone, as she said, or perhaps you want others to come along with you. But I also want to move the conversation along and bring in the concept of the kind of partnerships that we require. What do they look like? With who?
Okay, first of all, I will say something that happened a week ago to show the strength of the AfCFTA trading companies and what they're doing. We had a meeting, came to us a group from the AfCFTA and NEPAD and UNDP, and we invited our Central Bank of Egypt, and we made a focus group with around 45 Egyptian SMEs that are exporting their products, and they have registered companies, and they have very good products. And we started asking them a lot of questions. Why you are not, do you know anything about Africa? Do you know anything about exporting to Africa? And we made like challenges and what are the challenges. And we saw that we have the support of the government. We have the support of the AfCFTA. We needed a lot of market access information. They needed to know the taste, the preferences, where to go. A lot of education done.
Yeah.
And today, before this session, right away in the morning, from 7 o'clock in the morning,
Yeah.
we had in the other room matchmaking and master class
Yeah.
to other SMEs from Rwanda and all the SMEs that are in Biashara Afrika today.
Sure, fantastic.
And the amount of information, when we get together, the amount of information they got from each other, they didn't know that Gabon, now they have the factory of wood. Raoul would talk more about it.
Yeah.
They don't know that today in Rwanda we have the factory of milk powder. A lot of examples. I'm not going to talk about the cotton and the Egyptian cotton and
Sure.
the textiles. So I mean, getting together and transformation of knowledge is the key success factor.
I totally
Thank you.
agree. I totally agree. And of course, you could also tell them that AfCFTA,
Of course.
seated in Cairo, does have a portal that provides market information.
Exactly.
That would be of tremendous
And of course,
help
they
to
were
them.
with us in Egypt, of course.
Yeah, I'm a salesman
Thank
for
you.
AfCFTA. Thank you. Thank you. But you didn't answer my question on the partnerships.
No, the partnerships, I agree that
What kind of partnerships?
everyone should get together because no one, it's like wheels with we have to move together. So everyone has to be together. You cannot work alone without the customs. You cannot work alone without the central bank. You cannot work alone without each other in each country to make it happen. So
Sure.
getting together is the key point.
Yeah. Felix, I'm on to you. It's again your thoughts in terms of the models, if you'd like to add to that. But really, I want to move on to the partnerships and what kind of partnerships we require to make this happen. Dr. Adaliku spoke about it in his opening address, and I've heard it referenced by the other speakers here, that we need partnerships. But I want to define them. What do they look like?
I look at these particular models as building an ecosystem. Now, what we're doing at Real Sources Africa is that Real Sources Africa is basically a supply chain ecosystem. And what we're doing is that our main role is to guarantee manufacturers in our country, Kenya, where I'm the trading company for, that they can open up a market base for their products in a different country without the hassle of logistics, warehousing, collateral management, trade finance, trade insurance. And how we do this is through partnerships. So over time, we've been able to develop a database, and we've been able to bring together partners, financial institutions like AfriExim. We have in our local country, we have a bank called KCB Bank. We have UBA Bank. At the same time, we brought in insurance companies. We brought in collateral management companies, warehousing institutions, logistical platforms, logistical companies, and then holistically build a platform called Real Sources Africa.
Sure.
And what Real Sources Africa is doing is that we've been able to bring in together the large-scale manufacturers and the small-scale SMEs to bring them together to aggregate. 2 years ago, we tried to aggregate using SMEs, which was a big disaster. Unfortunately, we were not able to build up the volumes that would build up a case to cut down the cost of logistics.
Why?
But cut down the cost of logistics, we realized that aggregation was not the only problem. We had an element of trade finance, but the collateral for trade finance also a problem. So we had to bring in collateral management companies to come in and serve as the guarantor to the financial institution to offer credit so that aggregation could actually happen. Now, what I'm trying to say is that for us to move together as a continent, we have all to move towards one direction. These are financial institutions, insurance companies, collateral management companies, warehousing institutions, and to de-risk the entire transaction, we initially have to do a lot of market development.
But how do you engage with them? Is this a company-to-company conversation, or is this an association-to-association conversation? How do we make them play ball?
Now, we live in a continent where people have to see to believe. Initially, as a company, when we started engaging, we started with business member organizations. Most of them are quite reluctant to work with us. But then when we moved forward to actually now deal with the actual traders, these are people who are at the border points. These are people who are farming. These are people who are manufacturers.
Yeah.
And then you get to see the need, the actual desire to actually sell.
Sure.
And when we get that, everyone started moving.
Yeah.
On the 7th of November, we will be flagging off 100 containers from Kenya into Zambia, DRC, and South Sudan.
Sure.
70% of the consignment is aggregated from the large-scale manufacturers, 30% aggregated from SMEs.
Sure.
We cannot do without the large-scale manufacturers because they're going to create the volume that we require to
Yeah.
plug in SMEs
Yeah.
to create a train that will actually flow.
Fantastic, 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 fantastic. Intra-African trade is happening, right? It is happening. Thank you very much. Dan, let me come to you. And again, I'm putting the same proposal before you, your thoughts, if you like, on the models, but also your thoughts in terms of the kind of partnerships that we need.
I believe that it's about time we begin to think global or continental and act local. In that sense,
Global or continental? Oh,
we are in Africa.
okay, okay. Okay,
Yeah.
okay, got you.
And act local. Our partnership should be spot on. Doing business in Africa is very difficult, but there is hope. There is hope in the sense that platforms like this, seminars like this, is moving forward
Yeah.
very fast. I can tell you that the European Union, it took them decades to do what they are doing now. How old is AfCFTA? And bringing us all together to be able to sign deals, to sign contracts, I give AfCFTA a thumb up.
Yeah, like it's
Well,
happening outside.
Like it's
right?
happening right now.
At the marketplace, yeah.
Yes. Right now, when we talk about partnership, we have a lot of barriers. Partnerships are the best to break those barriers.
Break them down, Dan, very quickly.
Okay.
Just the key ones.
Okay, the key ones are, let's say, signing a contract with, I don't need to go to Kenya to do business. I need to have a trading partner in Kenya. He solved all my problems for me. I don't need to go to South Africa. We just sign a deal as a trading company. If I have 10,000 containers, I move to him. We have all our financial, our Incoterms, everything deal we sign. He take care of the problem for me. There's one problem which the trading companies are solving, which is they're breaking the barriers on tariffs.
Sure.
The tariffs have been negotiated by AfCFTA, but we are still having problem through customs. Customs are the most difficult part
Yeah.
in African trade. And with this partnership with the trading companies, we'll be able to solve the customs problem.
Yeah.
Because I don't need to go to Egypt to fight on the cocoa tariffs. The partner sitting in Egypt
Yeah.
will fight on the cocoa tariffs and make sure that
Yeah.
we have that barrier. And again, what is going on right now is also had to do with logistics. So we can sign logistic partnership
Yeah.
in the various countries and make sure that
Company to company or
you can sign company to company logistic
Right.
problem and block your freight,
Yeah.
whatever.
Yeah.
You have to move just to, it's all had to do with cost.
Sure.
Yeah, it's
Yeah.
all had to do with cost
Yeah.
of doing business in the continent.
Yeah. I want to introduce another element into our discussion. I'm going to interest groups here. Women and young people. Babar, I'm looking at you. It's great that we are dreaming, we're talking about how we're going to facilitate this and we need to build these partnerships. How do we not leave others behind? Particularly, one, those that have been historically disadvantaged, women, and two, those that we need for the future, young people.
Thank you again. It's important for us to make sure that when we facilitate trade and we simplify trade, we do it in an inclusive way. Otherwise, the sustainability of whatever we are doing, it's not guaranteed at all. So, colleagues, it's hard to do business in our continent in itself. It's even harder as a woman to do business in our continent. You are talking about spending 14 hours at the border gate, at the border post. We have horror stories of women, 14 days, man, of women who had to spend that time and days at trying to move the goods across. The level of harassment that they go through, the type of facilities that are there, just their dignity, how it's being pulled on. By the time they come back to us, they are totally destroyed. You know, and we are talking about a woman here who is just trying to feed her family, to support her community, but the way she is treated is as if she is a criminal or she's doing something so wrong. Secondly, you come to the boardrooms, leaders in the boardrooms, you find that the level of exclusion of women is actually unbelievable. And people do it both consciously and unconsciously. Most of us, and I'll make an example of South Africa here, we have seen during apartheid how painful it is for people to be excluded. It was both black male and female, excluded in our own economy and politically. That was the hardest times of our lives. And if you look at that, and you can now imagine the exclusion of women and youth in those decisions, just think about it. People really take this matter for granted. Colleagues, especially men in the room,
Sure.
the issue of exclusion is really deeper, and it goes to
What's the solution, though?
Yes, I'm getting there. Sorry,
Okay,
it's
very
important that we just make sure that people understand the gravity
Give the
of the matter
context.
that we are dealing with. So we do need to be very obvious in even setting aside and making sure that in the decision-making processes, in contracts and deal, we do create space for women and for youth as
law?
well. We must be deliberate
By
about
law?
that. By law and through our own implementation. We must be deliberate and not be ashamed of doing this, number one. And then number two, we must provide support structures to women. And I'm not talking about something that we expect from other people. We already do that as a company. Our company has women majority. Our company, we ensure that as we train and develop SMMEs and professionals, we are biased towards the majority of the training room must have women. So those are the things that we make sure we advocate here. And when we talk about facilities in areas like border gates and so on and so forth, let's think about women, because our nature in generally, we do need certain facilities.
Absolutely.
So consciousness and that bias, I think, is very important in each and every step that we take.
I want to bring Arise to talk about your experience in terms of the companies that have started trading under the AfCFTA, what you have seen. But before we do, any of my panelists want to, you have a thought here on the issue of young people? You look young yourself.
I want to talk about women.
And women.
When you talk about the young people, it's a personal topic for me. I think I registered my first business at the age of 18. And initially just started as a normal trader. But the amount of bottlenecks that I had during the growth process was, one, no bank looks at you as an opportunity. Financial institutions will look at you as a risk, that's one. Any company that you walk into trying to get an opportunity still looks at you as a risk. To summarize, what I'm trying to say is that I urge the leadership to let the young people fail. Give us an opportunity to fail. And let's view failure as an opportunity to grow. Each and every time you try something that does not work out, it doesn't mean that you've lost it. It means it's a stepping stone, it's a learning that you have collected to go to the next level. Without that, we may try to reinvent, we may try to recreate so many models, but
Yeah.
before we get there, there's
Yeah.
a journey, there's a process to get there.
Sure.
We must be willing to walk through that journey.
Yeah.
if
Now
we
you
want
make
to
me
get
go
the
back to my question about whether capital needs to be patriotic here, because you are asking for a chance. Yes, we'll take a chance on you, but you are risky because one, you don't have experience, and two, you are young, you are ambitious. How do we square the hole, as it were? Because there's the issue of risk, which still needs to be managed from a financial institution perspective, but there's also the issue of your ambition, which needs to be given a chance to realize its fullness.
I say you have to bring in two parties together. You have to bring the older generation that has the experience, and you have to bring in the youthful generation that has the innovation and the drive.
Sure.
Without the two, we will not innovate.
Partnerships.
Yes.
Yes. Okay.
Let me talk about women.
Yes, please.
I believe that women are so powerful. And in this conference, we have had more women panelists than men. And again, if you look at the African continent, when you want to talk about entrepreneur, the real entrepreneur, they are women. We have 70% to 74% of women being entrepreneurs journey.
Yeah.
And I want to take this opportunity to encourage women that, to be honest with you, you are the most important people on this continent.
Yeah.
Without you,
Yeah.
this continent would never move anywhere.
Yeah.
Every corner, I was trained by an illiterate mother who was able to feed 10 children by selling charcoal. So I have a lot of respect for women.
Yeah.
400 years down the line, women still think they are just relegated to the background. So my sister, when you want to talk passionately about women being relegated,
Yeah.
think about what is happening on the continent right now. You are so powerful.
Yeah.
Yesterday, I saw it right here.
Sure. I agree with you. I think I will add and say to you, I think in part your message is the environment that your mother and my mother grew up in is totally different to the environment that we have today.
Thank you.
Today we have a listening environment. We have women who are getting educated. Yes, there are thousands, millions that are still excluded. But the environment is much, much more open. Come on, let's take up the fight and let's do
encourage
it.
them.
Totally agree with you.
Please.
You want to add one more
Yes.
piece very quickly because I want to bring in the practical experience of trading
Often,
under AfCFTA.
and I agree perfectly well with what Dan just said. But often, the discussion should be about equity, not about inclusiveness. Look, women form the majority of the African population. You can't exclude them. The youth are 75% of the African population. There's no way you can exclude
answer.
them. So we are really talking about equity. Are they getting a fair share of the cake? Are they getting their reward? It is true that men tend to get more statistically, or whatever, by whatever means, for their effort than women. I think that is where we should focus, so women get a fair return for their effort.
I believe they are getting, Farid. I believe they are getting more.
Can I come in quickly? 2 minutes sorry, on this one. Look at, firstly, the leadership of the countries. How many women do you have as presidents? How many women do you have within the executives of that?
We are sitting in the right country, Babala, Rwanda. Specific example where women leaders are a majority.
Who is the president of Rwanda? Who is the president? Is she wearing a dress?
President Paul Kagame.
I've never seen her in
But
a
he has
dress.
opened the door.
So, no, let's be fair. The strategic decisions,
Yes,
therefore, are
deliberate.
made by men who sits in the tables when strategic and very, very important decisions that affect the lives of people. Who sits on that table?
Yeah.
It's men. You know what we are saying, that equity that he's talking about, let's sit together on the round table. Who runs the businesses, big businesses of the countries? It's men who run big businesses. And I'm talking even about South Africa. You have 8% of the CEOs running listed entities. 92% is run by men. And you tell me that women participate meaningfully in the economy of our continent and South Africa? No. No.
Let's open the door. Let's open the door.
Let me go
Very
in
quickly,
and
Nadine.
announce something that AfCFTA started a women and youth initiative.
There you go.
And this one will be a very strong initiative and very focused. And what they're doing now, they are going from country to country and from border to border.
Yeah.
Taking the challenges, because you can't standardize. In Egypt is different than in South Africa, it's different than in Rwanda, in Ghana, and Kenya. So the new initiative of women and youth of the AfCFTA will solve it all.
Practical examples. Thank you, thank you, thank you. The points are well made and they are accepted. Rahul, very quickly, I want to round up this session with just your lessons from the companies that you have dealt with that are trading under the AfCFTA.
So I'll just talk about a couple of trades that we've been doing, not under AfCFTA, but Intra-Africa. We recently started trading beef from Chad into Gabon. Gabon traditionally used to import meat only from India and Brazil. So we worked on replacing that with meat from Chad, and we developed a road route to be able to supply that. So we send beef in refrigerated trucks to Gabon, and it takes about 7 days to reach there.
Sure.
But after reaching there in 7 days, it spent about 14 days waiting for a document from the phytosanitary department to get the truck in. So imagine the cost of the truck, refrigerated truck, waiting at the border for 14 days.
Yeah.
No amount of custom duty waiver would cover up for that cost.
Absolutely.
So I think one of the important things is to how do we make our systems and processes conducive to intra-Africa trade, which has very different dynamics from products coming from outside.
Absolutely, more efficient.
Similarly, we send wood from Gabon to Togo and Nigeria. The ship reaches in 7 days. We somehow managed to scrape the documents to reach there in 7 days, but then it again takes 14 days for clearance.
Sure.
So all these things are minor things which we need to look at, which will eventually reduce the cost of shipping within Africa. And those are some things that I think the AfCFTA Secretariat in their next round of discussions and policy making can look at to enhance intra-Africa trade.
Absolutely, absolutely. And thank you, thank you, thank you. Ladies and gentlemen, thank you for your time. Please help me to thank our magnificent panel. Thank you.